MicroStrategy CEO Michael Saylor has shown remarkable interest in the newly approved adoption of fair value accounting principles for Bitcoin and other cryptocurrencies. In this tweet on X, he said, FASB has officially adopted fair value accounting for Bitcoin for fiscal years, beginning after December 15, 2024. This upgrade to accounting standards will facilitate the adoption of Bitcoin as a treasury reserve asset by corporations worldwide. And according to him, this is a very bullish narrative for Bitcoin. Let's now get into the full details of the adoption and why Saylor is very excited about it. Make sure to leave us a like, subscribe, and drop your comments below. When Bitcoin's price rallied this past month, it brought significant profits to its investors. This included not just retail, but also institutional investors and companies such as MicroStrategy, Tesla, and others that hold crypto assets. There is the expectation of a further increase in January 2024 if the Securities and Exchange Commission, SEC, approves spot Bitcoin ETF applications. However, before it happened, the FASB made a change that might affect their overall profits and losses. Bitcoin price fluctuation impacts the net profits and losses of crypto holders, and with different purchase prices, it also affects the reported income of the enterprise. The Financial Accounting Standards Board, FASB, published an Accounting Standards Update, ASU, on Wednesday that is set to improve the accounting for and disclosure of certain crypto assets. Per the new standard, an entity holding certain crypto assets will be required to measure those crypto assets at fair value. This will be applicable at each reporting period with changes in fair value recognized in net income. These amendments are set to come into effect during the 2025 to 2026 fiscal year, although the option of early adoption is also available. The fair value of an asset refers to the actual worth of an asset, which is derived fundamentally and is not determined by the factors of any market forces that account for market price. According to the fair value model of Glassnode, Bitcoin price is technically at $36,000, which is a steep 14% decline from the market price of $41,917. This will largely affect the overall holdings of the crypto companies. However, by the looks of it, a cemented policy is a positive development for digital assets in the long run. This point of view was also shared by Michael Saylor, the CEO of MicroStrategy, which is presently the publicly traded firm with the largest Bitcoin holdings. He tweeted, "This upgrade to accounting standards will facilitate the adoption of Bitcoin as a treasury reserve asset by corporations worldwide. Bitcoin price has largely affected the value of Grayscale Bitcoin Trust, GBTC, in the past, but this impact is likely fading away. The potential of GBTC turning into a spot Bitcoin ETF by next month seems to have imbued considerable optimism in investors. This is evident by the fact that despite the cryptocurrency falling to $40,000 this week, GBTC's premium kept improving. While the premium to net asset value, NAV, is still negative at -9.47%, it is still a significant improvement from -44% 6 months ago. This is also a sign that Bitcoin price correcting has a much lesser impact on the ETP, and its value will likely be driven by broader market cues. With the hype surrounding the ETF, there is also a chance that GBTC might manage to completely recover from its present discount and trade at a premium as it did before February 2021. On the ETF side, the U.S. Securities and Exchange Commission, SEC, has been meeting with institutions that have submitted applications to offer spot Bitcoin exchange-traded funds, ETFs. The regulator has one main agenda, besides revamping the applications: to let the ETF do cash creates, cash redemptions, as opposed to in-kind creates, crypto redemptions. The SEC may be determined on only approving the cash create ETFs. Institutions that refuse to comply will likely have to wait longer for approvals. A Bloomberg Intelligence ETF specialist, Eric Balchunas, alleges these strictures in a recent post. The statement comes after Valkyrie filed the fourth amendment to its spot Bitcoin ETF application, indicating that it will also be doing cash creates if approved. Based on the update, the firm holds out hope for in-kind creations down the road, with an excerpt from the filing noting, "subject to in-kind regulatory approval." The move shows that Valkyrie prioritizes getting an ETF approved, even if it isn't in the most ideal conditions. With this decision, Valkyrie joins BlackRock, Fidelity Investments, ARK Invest, and Invesco, who already capitulated to the SEC's preference for cash redemptions. Balchunas also noted in a recent post of Chatter that the financial regulator may be dead set on letting cash create ETFs out in the first batch of approvals. Responses to the developments on X show an inclination to submission. that the institution should go along with the SEC's cash, creating a preference for as long as it gets the product approved. The impatience is understandable, considering the drag that has already been witnessed in the market, invigorated by a series of delayed orders and resubmissions. Elliot Johnson, CIO and COO of Canada's Evolve ETFs, has also encouraged embracing cash redemptions, adding that they could change it later, after approvals come in. The SEC is reportedly pushing for cash creation, proposing that broker-dealers cannot deal in Bitcoin, unlike exchanges. However, if the ETFs do cash creation, the broker-dealers or institutional players applying for spot BTC ETF approvals would take the initiative to transact in Bitcoin. Such a turn of events would reduce limitations for everyone by keeping the institutional players from using unregistered subsidiaries or third-party firms to deal Bitcoin. With 5 already agreeing to do cash creates, it leaves 8 that continue to contend against the proposition. Nevertheless, the 90% odds that Balchunas and colleague James Seyffart gave for approvals of the spot Bitcoin ETF between January 5th and 10 remain. In the wake of bankruptcies and the likes, SafeMoon's price took the brunt on Friday after the company seemingly collapsed and filed for bankruptcy. The filing came a little over a month and a half after the U.S. Department of Justice arrested key members of the company for defrauding their customers for millions of dollars. SafeMoon began trending in the early hours of Friday after reports of an internal message discussing bankruptcy began making the rounds. Per the message, the chief restructuring officer, Kenneth Erler, noted that SafeMoon had been facing several operational and financial challenges. The message further stated that as a result of these challenges, the company could not continue its business operations and would be filing for Chapter 7 bankruptcy. This was confirmed on Friday after SafeMoon appeared on the filings page of the United States Bankruptcy Court District of Utah website. While an official announcement is awaited, the crypto market bid goodbye to the company, stating that this was bound to occur as the company was operating on stolen funds. What do you think about the SEC's move on ETFs? Are they purposely looking for reasons to delay the approval? Let us know your thoughts in the comment section below. Also, don't forget to like, subscribe, and turn on notifications. Thanks for watching.
Hey Savvy Finance enthusiasts, massive shout out for being the heartbeat of Savvy Finance. Your support has been the wind beneath our wings, and we can't express our gratitude enough. Now buckle up because we've got an exclusive deal just for you. Ever wanted a slice of the action? We're offering a golden opportunity to own part of our YouTube channel's potential future revenue. This isn't just an investment, it's an invitation to be a part of our story. Investing means you're not just an investor, you will be a participant in the future of Savvy Finance. No cheesy lines, just a genuine call to embark on this journey together. But wait, there's more. Your mission, should you choose to accept it, become a Savvy ambassador. Share our videos on every platform: Facebook, Twitter, LinkedIn. Your shares amplify our visibility, potentially translating to more views and more YouTube revenue. Here's the kicker. If our viewership increases, we would not be just growing financially. We would be making a tangible impact by spreading valuable financial education. Now the icing on the cake. Invest and you'll score exclusive access to our private Savvy Finance Discord. Here you can chat with Savvy Finance, swap ideas with fellow investors, and be at the forefront of exciting developments. Click on the link below to register your Gigastar account. You can also find the link to my offering page in the description below. Get your Gigastar account ready, review the offering details, and let's embark on this thrilling venture together. To the incredible Savvy community, thank you for being the backbone of our success. Your journey is my journey, and together, we're creating waves. Cheers.